Well, good evening, everybody. Welcome back to Strongman Personal Finance. Roblox! The stock is down massively. What happened? My vertical line, I needed it, I wanted it, and I didn't get it. So Roblox is a company that I've covered before. What is it all about? Well, if you're a young kid, or maybe you're an adult, that doesn't have any social life because you're a loser, maybe you want to play video games. Well, there's this game called Roblox, which is actually really a marketplace, a platform where people can come and create games. You can create them. You can make a freaking game, or you could just be a participant and play other people's games. Now, how does the company make money? Well, it's actually a pretty ingenious idea. Okay, so by allowing people to create games, the company allows or lets kids or even adults do most of the heavy lifting for them. Most gaming studios, they're like making their own games. With Roblox, it's a platform where they facilitate the creation of the games and they allow people to come on and play those games. Now, Roblox, the company, makes money by offering this thing called Robux. Robux is digital currency, okay? It's probably worth more than Bitcoin, but it's digital currency. Like, remember you used to go to the pizza, like Chuck E. Cheese or whatever, and you get the little fake tokens? Well, this is basically the same thing, but you can purchase Robux with real money, and you can take those Robux, and you can go on your little marketplace. You know, little Timmy, he wants to spend some money, and he can buy cool things like cheeks. That's right. Your child can come on here and buy 2 little red ovals for 65 Robux. So you can see how the company makes money. They have the games, and then they have all these features and add-ons. You can buy other people's games. There's a bunch of cool stuff on here. You can go to like Discover, and you can check out the website itself. So let's see the history of this company. Well, the stock is down 22% today, okay? And over the last 5 years, the company has basically collapsed. Over 5 years, since it's been listed on the stock exchange, it's been down 32%. That's pretty bad, okay? So the stock price hasn't done that well. Now, if we go and briefly look at the financials, we see revenue is growing at a pretty healthy clip. Revenue's going up and up. There was kind of a dip or a flatlining in 2021 and 2022. But now it's recovered, and it's basically going up at a 45-degree angle. The growth rates are pretty decent. That's still decent growth. 22% year over year was the most recent revenue growth. I think this earnings is showing on here. But that's pretty decent revenue growth. Profit margins have actually been increasing. Their gross profit has been going up slightly. I mean, like, think about how expensive this company is to maintain. I mean, you're basically hosting a marketplace. A digital marketplace, okay? But we can clearly see a big problem here. So the gross margin, the top of the income statement, very profitable. Operating margin, very negative, okay? We're going to see why. But on the accrual basis of accounting, they're actually losing a lot of money. I believe it's a timing difference between when they collect the cash, when people buy Robux, and when they're allowed to say that they've earned that money. Because just because a company receives cash doesn't mean they've earned the revenue. I could buy Robux, for example. I don't know if they allow this, but let's say I buy Robux and I'm like, oh, I don't want to use it. I want to redeem it and get my money back. Well, if I never used the Robux, I never earned it. And that's kind of what's going on here is you're going to see positive cash flow, but losses. And part of that is because they have to amortize that revenue over time. They have to recognize the revenue over time. And it's also partially because of stock-based compensation and other non-cash expenses. So massively, massively, massively unprofitable on the accrual basis of accounting. If we go to the statement of cash flows, it's a different story. Their cash flows from operations, from running their business, are positive. And they have been positive. All right, all the way back, it looks like till 2020 and before. So this company is generating positive cash flow. And they haven't had a single quarter where they've had negative cash flow. And the trend is generally up. It's generally going up. So we see there's this difference here. They're losing money on the accrual basis of accounting, but they have positive cash flow. Now you can see the reconciliation right here. They go from the loss of negative 270, add back depreciation and amortization. Those are non-cash expenses for capital assets and intangible assets. Stock-based compensation, 240. So out of that $270 million loss in this most recent quarter, stock-based compensation was like 90% of it. But overall, because you have to add back those non-cash expenses, those show up on the income statement, but they don't show up in cash flow because they're non-cash expenses. When you reconcile that, you have positive operating cash flow. We can also see that they're generating cash flow from share issuance. They're giving out shares. Why? Well, it's either because they're trying to raise money or it's because employees are exercising stock options, one of the two. But overall, I mean, they have pretty solid free cash flow. I mean, they've had a couple of quarters of negative free cash flow, but overall, they have solid free cash flow. So cash positive, accounting negative. So let's go ahead and read the earnings report. Roblox Corporation, a global platform bringing millions of people together through shared experiences, released its first quarter operational results. Revenue was $801 million, up 22% year over year. So this actually, let's see. So yeah, they did update that already. That's pretty fast. Sometimes it takes a day or two for them to update this. Let's see. So revenue is up 22% year over year. Bookings were $923 million, up 19% year over year. So the bookings are the upfront cash payments. You go and you buy Robux. The company Roblox has the cash, but you haven't used the Robux yet. So the company hasn't earned the cash. You have to understand the difference there. So bookings, this is people just buying Robux, basically, up 19%. Net loss was $270 million. We saw that. Net cash and cash equivalents provided by operating activities was $238 million, up 37% year over year, with free cash flow up 133% year over year. So pretty strong cash flow growth that's outstripping revenue growth and bookings growth. Okay. Average monthly unique payers was 15.6 million, up 13% year over year. And average bookings per monthly unique player was $20, up 6% year over year. Okay. So they're growing how much money that people are spending each year. And it looks like slightly more than inflation. And on top of that, they're growing their actual users by a pretty healthy amount. Engagement hours up 15%, et cetera, et cetera, et cetera. So why did the stock drop? Well, here's the forward guidance. This is what people are saying why it dropped. Revenue between 855 to 880 million. So this is their second quarter guidance. So if we go back to the second quarter of last year, their revenue was 680 million. So if we go 880 divided by 680, they're guiding 30% revenue growth. Did I do that right? Hold on a minute. Revenue between 855 and 880. Yeah. So they're guiding for 30% revenue growth. Wow. Which is probably because they're earning some revenue from all the bookings in the past. Bookings between 870 and 900 million. So apparently the revenue projection is pretty good. The bookings is, I think, what caused the big issue. I think the bookings have slowed down into like the high teens. So that's what worried people. They're also projecting another loss. Net cash and cash equivalents provided by operating activities between $61 and $68 million. So they're expecting to generate free cash flow of $16 million and $23 million. Still cash positive. Updated full year 2024 guidance. Revenue between 3.4 billion and 3.5 billion. So if we look at the full year for 2023, let's compare that. So revenue is going to go best case 3,525 divided by the full year 2,799. So they're projecting a healthy 26% revenue growth year on year. Pretty impressive. And then bookings a little bit more. So they still have pretty significant cash flows. But they're still losing money because of non-cash, et cetera, et cetera. They're also projecting free cash flow between 350 to 420 million. So if we compare the free cash flow to the prior year, they generated 137 million of free cash flow. So the projected growth is actually pretty crazy. They're actually their cash is growing. Their cash flow is growing exceptionally well. 420 divided by 137, 300 something percent growth in cash flow. There you go. There you go. So let's go ahead and look at their balance sheet. So this is their most updated balance sheet. They have total current assets of $3.3 billion. Most of it is in cash, cash equivalents, short-term investments, and accounts receivable. And then they have deferred cost of revenue. So I think what they're doing here is they're matching the expense associated with, because like what they're doing is they're receiving the cash up front from their customers when they buy Robux. And some of the expenses that are associated with that cash are also deferred. So what they're going to do is they're going to take this 525, and as they earn the revenue, they're going to match that expense to the revenue, because that's what you do in accounting. You match revenue to expenses. So that's what I think that deferred cost of revenue. So it's money they've already spent on company expenses that have not yet been incurred or matched to the revenue. So, but really they still have a pretty solid, almost $1 billion of cash and $1.5 billion of short-term investments. That's pretty good. Current liabilities, $3.1 billion. So you look at that right off the bat and you're like, oh my God, they have a lot of short-term debt, bro. It's almost a current ratio below 1. Look at what the vast majority of their debt is. Deferred revenue, current portion, $2.5 billion. So they have received $2.5 billion of cash, but they haven't earned the revenue yet. That is all that deferred revenue means. That's all it means. So eventually all of this, assuming it's actually earned, is going to be recognized as future revenue. So that's how you should think of this, is future revenue, the $2.5 billion there. Then they have deferred revenue net of current portion of $1.3 billion. So their total revenue that they have not yet earned, but the cash they've received is they have almost $4 billion of cash they've received, but they haven't earned yet because they haven't provided the service. So basically this company gets a ton of cash up front, but you don't see that cash reflected in the income statement for a while. So if you look at their overall expenses, it's not the worst thing. Okay. I mean, they have $1 billion of long-term debt. Let's see their long-term assets. So they got long-term investments of $1 billion. They got property, plant, and equipment of $700 million, some leases, deferred cost of revenue. Like I said, that's going to be matched to the expenses, to the revenue. You always match revenue and expenses in accounting. That's why they're putting deferred cost of revenue on the balance sheet. It's an interesting company how they account for this stuff. But overall, it's a pretty solid balance sheet. They're sitting pretty good. Most of their liabilities are just money they've received up front. Now, people start canceling their orders in mass. That's when it's going to be a problem. Now, let's look at share issuance. So in 3 months, they've increased their share count by 1.3% in 3 months. Wow. So you can see there's a little bit of dilution there. I wonder if that's from stock options. Probably. Okay, so let's go ahead and look at their income statement. So we know their profit, their gross margin is pretty high. Developer exchange fees, that's increased a good. How much has that gone up by? 202 divided by 182. 10-11%. So I believe these exchange fees, I mean, I could be wrong here, but this could be potentially payments that they're paying to people that are creating content. But like I said, I could be wrong on that. But that's up about 11%. Infrastructure, trust, and safety, though that expense is up just a little bit. Research and development has increased pretty significantly. They've increased their R&D by 32%, which is faster than revenue growth. So they're definitely dumping money into R&D. Okay, so their overall loss from operations was $302 million. Like I said, there's non-cash expenses baked into here. That's part of the problem. And up here, this revenue number, they've received more cash than this. They just can't say that they've earned it yet. That's why you're not seeing it in the revenue portion. But you'll see it in the future. Because right now, it's sitting on the balance sheet. Right here is deferred revenue non-current and deferred revenue current. This is future revenue right here, almost $4 billion. So it's kind of, you can almost project where they're going to go. It's interesting. Okay, but overall, they had a loss on the accrual basis of accounting. Let's see. What Weighted average shares outstanding. So this is a year-over-year comparison. So year-over-year, their share count has grown 4.5%. Wow. So now we have the statement of cash flows here, okay? So we can see, basically, if it's positive on here, this is their cash flows from operations. If you see a positive number here, this is a non-cash expense that they're adding back. So we know depreciation and amortization. That's non-cash expense for capital assets and for intangible assets. Stock-based compensation. That's right. When you give out stock options, the rules of accounting, when you give out stock options to your employees, the rules of accounting make you put that on your income statement. Because it really is a cost. It's a future cost, assuming the company does buybacks. But it gets recognized on the income statement, but it's a non-cash expense. It's actually a cash inflow when employees exercise their stock options, but it's a cash outflow when the company has to buy back stock to mitigate the dilutive effect of giving out stock options. So the true cost of stock options is basically the cost of how much they're going to have to spend on buybacks to mitigate the dilution. That's the cost of stock options. Joseph Carlson, it should be moved. Yeah, shut your mouth, boy. So overall, like I said, healthy growth in their cash flows from operations. They've actually cut their acquisition of property, plant, and equipment year over year in half. I mean, that could just be a timing thing. Let's see. Purchases of intangible assets, purchase of investments. So basically, they're taking a lot of their money. They're generating all this cash. They're spending a little bit on investments, on like property, plant, and equipment, servers, computers, whatever. And then the vast majority, they're piling into investments, bonds, CDs, whatever, to generate some income. And then for financing, proceeds from the issuance of common stock. Like I said, I don't know if they're issuing stock to employees or if they're just issuing stock to issues. I don't know why they seem to have pretty healthy cash flow, but this could just be exercises of stock options. But so far, they have not done any net buybacks of stock. So they're still in like the growth phase, and they're actually getting money from their employees, but they're diluting you. So you own less and less of the company in the future. Okay. So what do I think about Roblox? Well, it's a decently growing company. It has very solid cash flow, but it's also unprofitable on the accrual basis of accounting, and it's for a good reason. This is basically like, it's not Palantir, but it's like that type of tech company, basically. Software tech company. All these companies have this. They all have great cash flow, but they have a huge amount of stock-based compensation because they're just handing out shares like candy. That's what all these freaking companies do. So what do I think about this company? I mean, it seems okay. Like it's definitely not going bankrupt. They have very healthy cash flow. They have some pretty strong revenue guides, but it's the bookings, because these bookings are future revenue. So if those slow down, inevitably your future revenue at some point will slow down. Company gets the cash first, and then that cash becomes revenue in the future when they earn it. That's how it works for this company. Interesting overall, though. Not the worst stock in the world, but what's the valuation of this thing? Let's see. Price to books at 251. Price to free cash flow of 139. Okay. Price to operating cash flow of $41. So you're paying $41 for $1 of trailing operating cash flow. Okay. That better be growing quickly. Whatever. All right, let's do some comments. Best supporting investment ever. Didn't Pelosi trade Roblox? Do you think I'd track her? I'll buy VT. One of Kathy's favorites. Is Kathy Wood invested in Roblox? It's the future, bro. IO, it's back to work. I go. Take care, strong man. Goodbye, David. Go make that money. Roblox is the first thing to go out the window with the squeeze on people's finances. Parents will cancel, so it's not a great. Yeah, like I don't want my kids because they're too young right now. They're basically 2 and they're just turning 2 and 3. I don't want my kids playing this garbage when they're older. Like I don't want to go on my credit card and see my son spending money on cheeks. And I know that sounds really weird, but like, what I showed you earlier, it's like 65 Robux to buy red cheeks. It's so stupid. I feel like this channel doesn't promote enough diversity. Where's the legendary? Who is that? Oh, you. Oh, okay. You people. Kathy Wood was buying at $80. Doesn't matter, bro. Debate me, bro. I'll $150. I'll debate you. If I debate you, sure, did you get any viewers? I don't care. I want your money. I will pay you $50,000 if you tell the name of any company that will 10x every year starting today. Well, if I'm wrong, do you get the money back? LaFufu wouldn't turn that down. Oh, Tattoo Jeff! Roblox, boy! Did I miss the reason the stock went down? Guidance on bookings. Because the bookings is future revenue. Is this a better balance sheet? Well, it's a much better balance sheet than Tattooed Chef. This company isn't going to go bankrupt anytime soon. They have healthy cash flow. They got plenty of cash. The only thing that will kill this company is like mass cancellations. I don't even know if you can redeem your Robux once you spend the money. But basically, a lot of their debt is just upfront payments of cash. People have been buying Robux. They just haven't used it yet. That's a lot of their debt. But it's cash flow positive, and they have like billions of dollars of cash and cash equivalents on their balance sheet. So I don't know. It's better than Tattooed Chefs. I don't know about elves. You're a bussy boy. I know. Tell me something I don't know. If Val was a public company and was attractively priced, oh, baby. Yeah. Fubo. I need to go check out Fubo. When will you convert Strongman tax into a C Corp and take it public? Yeah, I'd be a penny stock. Strongman on the pink sheets. When are you planning to start your own grift company and die? Well, you assume I want to give up ownership of my company. I want all the profits for myself. Because think about it. Let's say I issued Strongman stock, right? And you guys, I don't know how much my stock could even be worth. Okay? I mean, what would I do with the money? Yeah, basically, I would just put it in VT. Like, I mean, I don't know what I would do with the money. I already have my setup. Why do I need investor money? I can buy my own stuff and keep all the profits for myself. And trust me, I would not pay you a dividend ever because I'm anti-dividend. RuneScape is owned by a private equity. Success leaves clues sheeple. Oh, does it? Huh. Let's see. I thought it was publicly. I thought there was a publicly traded company that bought RuneScape. Maybe I'm crazy. Roblox is the game every parent fears their kids getting it. I mean, it's a really cool concept. Like, it actually is. Like, this has sustainability because it's infinite content. You know, you go to your little marketplace. You know, you can buy skins and stuff like that. Look at this garbage. Can you imagine your kids just going in here? Is this a chicken nugget? This is funny. You know what that looks like for like, I saw that for like half a second. I'm like, oh boy. I mean, I'm not going to say it, but if you just saw this out of the corner of your eye, what would you think? What are you buying there, boy? Let's go look at some of the games. Elemental Powers Tycoon. Blade Ball. Piggy. Exclusive. Oh, but if you subscribe, you get more games. But you get Blade Ball with both. Oh, I guess, okay, this is most engaging. So I guess, so some of these are probably subscription only. But look at this. Like, there's all these people are creating games all the time. It's like an infinite gaming resource. It's pretty cool. I can see why this company's popular. I'm feeling this call. Strong, man. Buy my Robux, bro. They have StarCraft. Let's see. StarCraft Simulator. Is this real? Okay, I don't understand this. Well, apparently they have StarCraft, but it just looks like a guy standing in a field with some blocks. Let's see. Strongman tax, man. Yeah, imagine if like it's just a one-man company, and then all the YouTubers start shilling my stock. Wouldn't that be ironic? But I would be a profitable company. Crazy. I could actually be valued. You bought Tesla Y, buy one IBIT and see what happens. What is that? I like it. All right, guys, that's Roblox. Interesting company. Not the worst balance sheet in the world, but lots of dilution. Lots of dilution. So, talk to you later. Cheers.